think the talk this week has been all about the possibility of a revaluation of gold. And I did a video about this a day or two ago. I suggested that the correct number would be $15,000 an ounce of gold.
Maybe about an hour ago, the official White House Twitter account put out an image of the White House painted in gold and all these gold coins falling in front of it and covering the ground like snow. You think back to the language Trump has used, the golden dome that he wants to build, his missile defense and the golden passport. But we might look back a year from now and go, wow, it really seemed like they were trying to tell us that something was coming.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for July 21st through July 28th, 2025, while supplies last. First this week, we have a special on pre-1933 gold. MS-62 $20 Liberty coins or MS-63 $20 St. Gaudens coins
are just $90 over melt. Own a piece of American history at just $90 over melt.
Next, backdated 1-ounce Platinum Eagles are only $270 over spot. And finally, Dealer's Choice 90% Constitutional U.S. Mint Silver Dimes and Quarters are just 65 cents over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today, two guests, our good friend Craig Hemke from TF Metals Report, and also Clive Thompson, retired wealth manager over in Switzerland. Craig and Clive, thank you so much for joining us today.
Hello, Elijah. Hello, Craig.
Clive, it's a pleasure to make your acquaintance. Thank you, Elijah.
Well, it's great to have you both today. I really wanted to get an update on the metals markets. And also, there's a lot of talk out there about possible gold revaluation. And it seems to me kind of maybe, a few weeks ago or a month ago would have seemed a bit pie in the sky out there. But as gold continues to rise, the probability of that happening seems, better and better each day. I still don't know if it's going to happen, but I'd love to get your perspectives on that. But first off, an update on the precious metal markets, both gold and silver. Silver, reaching towards $40 here. Your take on this, Craig?
It's been a remarkable week already as we record this. And it kind of, as a side to what you were just talking about, Elijah, the news has been dominated since late last week of, whether Trump would move to fire Powell or somehow get him to resign so that Trump can appoint someone who would immediately cut interest rates, I guess. And that is either coming soon or at least coming by May. And I think the market has sensed that this week. Big drop in the dollar index and big rally in both gold and silver. It sure seems to be queuing us up for a rather interesting back half of the year.
And what is your take on the metals markets? We've got your perspective before, Clive, but as we continue to see metals race higher, gold also racing near its all-time high again, your take on what's happening right now?
Well, I think the talk this week has been all about the possibility of a revaluation of gold. And I did a video about this a day or two ago. I suggested that the correct number would be $15,000 an ounce of gold. I think there's two big questions which I got. I literally got several thousand comments on this. One of the questions, which goes back to the first thing you said, was if gold gets revalued, what will happen to the price of silver? And I hadn't thought that was going to be a question, but my answer is if gold is revalued, silver is going to go through the roof. It's going to go up a lot. And the second question, I suppose it was really one question. When is it going to happen? Well, I've got my crystal ball here, which I occasionally look into to tell me the future, but unfortunately it's not giving me the precise answer on that. But what I can say when it's going to happen, we will know it's going to happen when the price of gold is rising rapidly and maybe the dollar's falling a bit for no apparent reason. So I think that will be a signal that it's going to happen.
Now, your perspective on this, Craig, because it seems like, a lot of people are talking about this more, people are talking about this more than ever about the possibility of the government revaluing gold, maybe to help, take down a portion or all of the U.S. debt. I mean, do you think that this is actually a realistic possibility? I mean, it's happened kind of before, back during FDR's presidency, when he revalued gold from about $20 to $35, just really devaluing the U.S. dollar. But your take on this, could this happen again today?
You just wonder if they're not trying to tell us something, Elijah. Even today, as we record this on the 22nd, maybe about an hour ago, the official White House Twitter account put out an image of the White House painted in gold and all these gold coins falling in front of it and covering the ground like snow. I'm like, what is this about? Yeah, it's right there on X. Anybody can see it. And you think back to the language Trump has used, the golden dome that he wants to build, as missile defense, and the golden passport that people can pay $5 million, to buy citizenship, and we're going to drill for liquid gold. He comes down the golden staircase. I mean, he's got gold all over the Oval Office. You think back to February when he was standing there with Secretary of Treasury Besson, and he said, and Besson actually said, we're going to try to remonetize the balance sheet. I mean, a lot of people went, well, the only assets you have on the asset side, of any substance is the gold that you carry at $42. And yeah, you got all this talk about gold-backed treasuries and whether that might come next year. So I don't know. Maybe none of this, this is all just dots on a screen that we can't connect. But we might look back a year from now and go, wow, it really seemed like they were trying to tell us that something was coming. The only thing that goes with this that kind of disappeared was all that talk a couple months ago about auditing Fort Knox, and the politicians got on board, and Elon Musk and Trump himself was talking about, yeah, we should probably find out how much gold is there. And then all that just kind of just poof. So I don't know if that would have to be done first or whatever. You have to know what's there and who owns it. But nonetheless, if something like that does happen over the next 12 months with a restructuring the Fed and everything else, I think we'll all look back and go, sure should have seen that coming. They were trying to warn us.
The funny thing was, Besant actually said, we audit the gold every year. Now, I noticed his lips were moving at the time, so I'm not sure if he was telling the truth. But he's the only one who knows that it's been audited every year, as far as I can tell. But let's just imagine for a moment that those vaults are empty. Does it matter at all? They can value the cobwebs. All that matters is that they undertake the accounting transaction and stand ready to buy gold at whatever the new price will be. And of course, some people say it could be a lot higher than 15,000. I don't think it should be, but let's say they stand ready to buy the gold at 15,000. Well, then they can refill their coffers. They can refill those vaults, which might be, if some people say, empty.
I think one concern with that is that we could see a whole lot of inflation, right? I mean, like in 1930, a lot of people, in 1933, as a lot of people note, it wasn't so much a revaluation of gold, but a devaluation of the US dollar. And, when we went off the gold standard as well, what we saw is an immediate, more printing, huge inflation in the 80s. So it seems like what good would this do than just create more inflation? What is your take?
I don't think it would create inflation. I mean, first of all, in 1934, when they raised the price of gold or reduced the value of the dollar, there was no impact whatsoever on prices. It didn't increase the prices. And secondly, if I take the figure of 15,000, which is the number I used in my video, that would be raising $3.9 trillion. Whilst they still keep their gold. So $3.9 trillion is only 10% of the national debt. And don't forget, every year they increase the national debt by $2 trillion anyway, and there's no impact on prices. So, or at least not on the official inflation number. Of course, there's an impact somewhere. The impact is on the price of gold, and the impact is on the price of equities and the price of rare things that people want to own, including even Bitcoin. That's where that money is being squeezed to, but there's no impact on retail prices because they're increasing the debt by $2 trillion a year. So if they revalue gold at 15, 50,000. They're going to create 3.9 trillion out of thin air, which they will use to get rid of the current year's deficit, and they will be able to pay down some of the maturing debt, which matures in the next 12 months. But I don't see any reason at all why that changes the price of pizzas or eggs or anything else.
Yeah, I think Clive's spot on. There's also this discussion that they'd revalue it ahead of, the strategic Bitcoin reserve or whatever that has been bandied about, that's the funding method for coming up with a zero-sum accounting gimmick to raise the cash to fund a sovereign wealth fund or a Bitcoin reserve act. The key would be, as Clive mentioned, will the U.S. actually purchase gold, make the price, the actual market price, $15,000 an ounce or whatever? If they just simply do this accounting gimmick and say, okay, we're now going to call it whatever on a balance sheet, does that make the price of gold go up or not? That's hard to say. There's these the big idea a couple years ago was to construct the platinum coin. Do you remember?
Exactly. Yeah. There's another variation on that, isn't it?
Right. It is. That's exactly right. And we're gonna create this coin. They're gonna sell it to the Fed. The Fed's gonna buy it for $1 trillion. And it's like, well, does that make, if it's 1 ounce platinum coin was special, does that make platinum worth $1 trillion an ounce? No. So it was just kind of a trick. And so unless the U.S. or someone starts paying and buying gold, say we are a buyer at $15,000 or $20,000 an ounce or whatever, then I don't know. You can't say for certain what the impact on the the market price, what someone's willing to sell you an ounce of gold for would be. I would suspect is, since it's a recognition of gold, that it would be a bullish factor. But how, it's impossible to say, because again, none of us have lived through this before. We don't have a precedent. We can't look back and say, well, when they did this 5 years ago, here's what happened. But again, the signs, all these different signals, signposts along the way are there. It's just a matter of whether they're all going to connect or not in the months to come.
I think it'd be a brilliant idea for the USA to stand as buyer of gold at this $15,000 or whatever level they decide. But they stand there and buy from all comers. And of course, they're going to get a lot of gold in the door. Now, that's a great thing because they're building up their gold reserves far faster than any other country in this brotherhood. They're annoying. I was going to use a word beginning with P, but they're annoying the Chinese who are trying to build up their gold reserves and have been every month after month, buying it at whatever the price is and not really caring what the price is. So suddenly, if the Chinese want to keep buying gold, they're going to have to pay twice a lot more because if the Fed is, or not the Fed, if the Treasury is standing there with a floor at, let's say, 15,000, nobody's going to sell any gold anywhere on the planet, even to the Chinese, for less than that, because they can get 15,000 out of the United States. So that would really piss off the enemies of the United States. You'd get their vaults full of gold and prepare them for what comes, which is obviously down the line at some point going to have to be a sound money policy. And what are you going to back the currency with? Is it going to be gold or what?
I think, so I know Andy Schechtman has talked about this a lot, and I know with both of you, we've talked about this on the channel, this growing block of the BRICS nations that just continues to grow and grow. And a lot of people are concerned about, the U.S. losing its hegemony, the BRICS nations really taking control with, probably soon the majority of the U.S., majority of the world population in their nations. And a lot of those nations, as you mentioned, Clive, China, accumulating a lot of gold. And this could really, if the U.S. did something like this, I think it's going to be a plus, couldn't it? Yeah, it could possibly be a game changer. What is your perspective on that, the BRICS situation, and how maybe gold revaluation could change the situation at all? What is your take, Craig?
That wheel took a big spin forward a little over 3.5 years ago, when at the start of the Ukraine war, the U.S. decided to seize Russians' foreign-held currency reserves and kick them out of the SWIFT international payment system. And I think a lot of countries within that, BRICS coalition, whatever you want to call it, looked around and said, well, geez, listen, look what happens to you if you get sideways with the U.S. They'll just cut you off at the knees. And we may get along with the U.S. just fine, but our interests don't align 100%, how long before do we get sideways with them and they do it to us? And so that kind of spun the wheel even faster, moving towards some type of alternate system. The Chinese have been working on this. The Russians have been working on this. And it's not, again, to me, it's not just a binary choice where it's one versus the other. It's competition for the dollar system. It's competition that draws demand away from the dollar at a time of increasing supply. And that just means you're lessening the value of the dollar that much faster. It's a natural evolution, really, of this monetary system, and it certainly seems like it's eventual.
Your comment, Craig, about countries being friends with America and then wondering what happens if we do something which we're suddenly not so friends. Well, we see that happening already. America is not the countries themselves, it's America themselves. And Donald Trump has been saying, your country has been cheating us by selling us your goods too cheaply. And suddenly, we thought we were doing you a favor by selling. Now you're calling us the enemy. So one day you're friends with America, next day you're the enemy. So I think that's making people a lot more worried about holding all their assets, all the reserves in US dollars.
Yeah, no, I hear you, Clive. And I was thinking as Elijah was bringing the question up, there's kind of a dichotomy there too, if I'm reading it right, in that, Trump has said, hey, if you're going to play ball with the BRICS, we're going to slap a tariff on you for that too, right? But at the same time, a lot of this discussion this week has been about a fundamental change in the way the Federal Reserve does business. In the mold of this America First construct of, they pay all of this interest, $500 million a day, I understand, in interest on excess reserves, a lot of that going to foreign banks. They got foreign banks that access to the discount window. They've got foreign currency swap lines with all these other different central banks that don't necessarily, you could say in the bigger picture serve America's interest, but it kind of draws the focus of America's central bank away from just focusing on America, and so I think this is kind of the broader picture stuff that I wonder if we're going to see all these changes coming over the next 12 months, these structural changes as to how the Fed operates. And then what does that mean for the dollar's place in the world and everything else? If anything, I know they're warning us that this is coming because Powell's not sticking around. He's not getting nominated for a third term, obviously. So either they come up with a reason to fire him for cause, which is what all this, Eccles building $2.5 billion renovations about, trying to find up a reason to fire him for cause, or that he's going to be out. And when he's out, Trump's going to put in someone that's, really weak dollar, very soft, low interest rate person. And the dominoes are going to fall from there, whether they're going to restructure the Fed. They're warning you all this is coming, just like all this gold references. And it just makes you wonder how things are going to look by next summer. And if you think gold is expensive at $3,400, you're going to really think it's expensive by next summer, I suppose.
One of the questions I got is, what does America want? Does it want a strong dollar or does it want a weak dollar? And we're hearing both messages coming from different directions, and it's hard to make sense of it.
Yep, for sure.
And even if you look at the mainstream, these banks, I think like Bank of America and other large banks are projecting $4,000 an ounce, within the next year or so. So it seems like even the mainstream is starting to see gold as really a great asset to have, and are projecting prices that just a few years ago we might, the mainstream would have thought was unrealistic.
Yeah, I've had letters from a couple of banks basically saying, we now think that gold is a way to manage your volatility, or we now think that gold has a place in the portfolio. And these banks this is over the last year or so, these banks are basically coming from zero. It was zero gold. It's now more than zero. And, what they want me to do is pick up the phone to the banker and say, oh, what about gold? Oh, that would reduce my volatility. Very interesting. I'm not going to do that because I already know the stuff. I've been a wealth manager for 47 years, and I've been managing my wealth for the last 3 years after that. But the world is full of people who have no idea how to access gold in their portfolio at the moment.
Right. The mainstream certainly is moving their eye to it, but not jumping in at all. And the public, just from retail demand as well, that we're seeing over at Miles Franklin, it's very low demand, low premiums right now. So it's not like the public is jumping in at the moment. I did want to maybe shift our gear from gold to silver. As we talked at the top of this interview, really going towards $40 an ounce. I'm also hearing that LBMA reserves are extremely low right now. Craig, what is your latest take on the price of silver right now breaking out, what we could see in the future, and also on the major exchanges, what is happening?
Yeah, that's always hard to measure. It's all guesswork often with what you're dealing with in that physical hub of London. Because it's deliberately opaque, they don't really tell you much about trading volume, and they lump together all of the different holdings, and so when they talk about how much gold is in the LBMA vaults, they're talking about the Queen's gold, and they're talking about the ETF gold and that type of thing. And they do the same thing with silver, and so it's always hard to tell exactly how much is there, but there seems to be evidence of a physical tightness. Whether that is what's being manifested now in price, or whether it's, just kind of a relationship and investor flows, they see gold going up and, so you bet on the gold silver ratio going down, that sort of thing. Hard to say exactly what's driving it, but boy, you look across the metals complex, Elijah, geez, copper got that tariff news from Trump a couple weeks ago, and copper's at all-time highs. Platinum is up 30 or 40% in the last few months with its own, what seem to be supply issues. And the fundamental case for silver is so strong with the last 4 years, maybe about a 700 to 800 million ounce supply deficit globally. And then what the fundamentals are going forward, as a conductor of electricity and battery demand and everything else. And so that makes a case that even $40 silver, which historically obviously has been a barrier to price, you look at it and you think, well, you wonder if this time maybe it won't be. I'd be very curious. We're going to get back to that $48 to $50 level. There's breathless commentary all over the internet, they're like it's going to happen next week or something. It's probably not going to happen next week. It's going to take a little while yet. But when we get there, I'd be very curious to see what happens this time. I don't think there's a lot of people waiting to sell at 50, because that would imply there were a lot of people that bought at 48 back in 2011. Trolls might think otherwise on the internet, but I don't think there's that many people that bought at 48. And so what happens if it gets through there? We've seen gold. Once gold started making new all-time highs above 2,000, heck, we're up 70% since then. So what happens if when silver gets through that $48 to $50 level next year or whatever? That could really begin to get interesting. So anyway, is silver expensive at 40? I don't know. It's relative to when it was at 20 a couple of years ago, but in the long term, the prospects are still pretty solid.
And your take on the current state of the silver market, Clive, and also the stories we're hearing of really tightness in the market?
I've seen evidence of tightness in the market, at least in the metal exchange. But one of the things, I kind of try to put these noises to one side and listen to what the price of silver is telling us. Listen to what the market is telling you. The market is telling you it's going higher. It wants to go higher. Now, that doesn't mean to say it goes straight up parabolic in a straight line. It never has been the case. When the markets, you've got to stretch out your time frame to months or at least weeks, not look at the daily movers, or even worse, look at the hourly movers, as some people do. But when you stretch out the time frame, you can see that the silver price is struggling to get higher. It's going to have these dips. There's going to be people who come in and say, I've got 1 million tons of silver, or whatever it happens to be. I'm going to sell into the market and take advantage of the price. And it goes down for a few days. But then you see it every time it goes down. It struggles for a while and then it comes back up. So it might well be that next week or on Friday we might have a smackdown and it goes down to 36 or 35 or 32. And then we say, it's all over. And then it struggles and struggles. And then suddenly one day we wake up and it's at 40. And then it goes back to 36. And then, it struggles. Then suddenly we're at 45. And that's kind of been the playbook. And it's always been the playbook for every commodity, for shares, for stock markets, for commodities. But it's not a rule. It's a common playbook. there are occasions when things just go parabolic. And especially when you look at them on the longer time scale. If instead of looking at it on a daily basis, you look at it on a weekly or a monthly basis, even gold and silver at the moment look like they're in the middle of a parabola. Now, what I think is going on is globally, we are in the middle of a melt-up. And I'm talking about over the last 5 years, almost everything I look at in terms of commodities, whether it be cattle or grains or metals or stock market or Bitcoin or silver, it doesn't really matter where I look, platinum, palladium, wherever I look, the prices are much higher than they were 5 years ago and much higher than would be implied by the consumer price index. So we're talking anything from 20 to 150% higher when the consumer price index is perhaps only up 18 or 15%. So I believe that we are somewhere in the middle of a melt-up. And of course, individually, some of these things will be going down, others will be going up. But collectively, the price of everything is heading up. And the reason it's heading up is because as we speak, the United States government is getting poorer by the day. It's borrowing money by the day. And as it gets poorer, it basically it owes more and is giving that money to someone. That money is going into the economy and it makes its way up until it finally finds the people who accumulate assets. And those people who accumulate assets don't then go and buy more pizzas. They go and buy assets. They buy gold or they buy silver or they buy stock market or whatever they do. And so I think that's what's going on. The government's getting poorer. Someone out there is getting richer, and asset prices, which are in limited supply, are squeezed higher because more people want to earn them today than wanted to earn them yesterday.
It kind of gets to Clive what you're getting at, and Elijah kind of was going this direction too earlier. I mean, we've hardly seen any action yet come into the precious metals. You see these charts that I see them on Twitter all the time of the I guess to call it the value, the market cap of the GLD. And people try to say, hey, see, that's a sign, it's getting crazy. Well, the reason that the market cap is twice what's ever going to be, it has been in the past, is because the price of gold has gone up. The actual tonnage held in the inventory of the ETF is still about 20%. Its highs back in August of 2020. So it's not like we're seeing some big, mad, crazy rush of, every Uber driver, and shoe shine boy buying the precious metals yet. Rick Rule has always talked about, back in the heady days of the late 70s, maybe we were as high as 10% global asset allocation to gold and silver and the mining shares. Well, we're still maybe 1%, maybe 2%. And there's so many dollars in the world. Heck, one stock alone, NVIDIA, is worth, $4 trillion in market cap? So you peel off just a couple basis points of the NVIDIA market cap, and move it into the precious metals. There's just not that many investment opportunities where that cash can go. So in terms of the metals being expensive or the mining shares being expensive, if all this plays out the way we kind of expect it to, it's early in the game.
The best thing which could happen I talk about the silver now. The best thing which could happen for the silver price is it goes up and down, up and down, up and down in such a way that we don't notice that it's heading higher. Because every time there's a spike in the silver price, and when I say a spike, like what it did this week, the grannies come out of the woodwork. What am I talking about? Grannies? The grannies with their silver candlesticks, or people who happen to have some silver coins, they've had it for 10 years and they think, now it's up. It's higher than it was yesterday. I'll take my price. And I know that has always been the case, but I had a perfect illustration of that last week. I happened to go to my favorite silver dealer, and I haven't been there since February because he's had nothing. He's been out of stock. And suddenly I get this message saying, I've got some stuff in. And I said, okay, I'll come along and have a look. And I have never seen so much stuff. He literally, one of the things he got in was one of these, what they call it, a monster box of maple leaves. I didn't buy that one because it was kind of out of reach of the sort of cash I was carrying on me on that day. But I did buy some nice collections of coins. These are Australian Year of the Ox and a bunch of Australian tigers and kookaburras. They're silver. These are all silver coins. That's a kookaburra. They have a new design every year. And I got this one. That's a 10-ounce coin. This one's a kilo coin. It's the Year of the Rabbit, 2023. They have a new coin, new zodiac animal every year, and they have it in all the sizes. So they had a lot of stock, and I could take my pick, and I bought more than I normally would, but that's because he had a large choice. But the reason he had a large choice was the spike in the price. People had come in and said, I'll have that, thank you very much. But of course, when this dies down, that guy who sold on that spike, he won't sell twice, he's already sold it. He's gone.
Yeah.
Now, we did another spike to 42, and then some other granny will appear with her candlesticks and so on.
And wait till the granny start buying. That's what.
That's what we're really waiting for.
Yeah, when your neighbor starts telling you about precious metals, it might be time to rethink. But we really appreciate your time today, both Clive and Craig. It was a happy accident that we all came together today. But we just really appreciate you guys hanging in there and talking to our viewers here on this panel. If our viewers are interested in learning more, I guess starting with Craig, where can they find you?
This side of mine, if you can see it over my shoulder, the TF Metals Report. Coming up on 15 years this November, which is, it's been a long wander in the desert. At least it's finally getting real fun, and we're having a lot of fun at the site. I do analysis every day, and the community provides information too. So that's where you can find all that we do at tfmetalsreport.com.
And Clive, where can our find?
So 2 places. Yeah, 2 places. I write articles on LinkedIn once or twice a week, often about gold and silver, but it can be about anything under the sun related to finance. But the other place which I'd like people to take a look at is my brand new YouTube channel. My last video had 2,500 positive comments, which was an article about the gold price going to 15,000. And I explain in words of one syllable how the US government could arrange to push the gold to $15,000, get $3.9 trillion of cash in hand, not increase its debt along the way, and keep all its gold. And I explain exactly how that mechanism can be worked. They've done it before in 1934. They could do it again. And I'm also hoping the British government do it, because the British government is hoping to sell their Bitcoin to raise $5 billion. And I'm thinking, well, what fools. There's a magic trick you could do with the accounting to raise that in cash. You don't have to sell it, and you can keep it, and then you don't. It's Rachel Reeves who's thinking of selling it. She doesn't have to be Gordon Brown all over again.
Fantastic. Well, Clive and Craig, we really appreciate your time today. Links in the description to your resources there. Yeah, thank you so much for your time, and God bless.
Thank you very much. Bye-bye now.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for July 21st through July 28th, 2025, while supplies last. First this week, we have a special on pre-1933 gold. MS62 $20 Liberty coins or MS63 $20 St. Gaudens coins
Are just $90 over melt. Own a piece of American history at just $90 over melt.
Next, backdated 1-ounce platinum eagles are only $270 over spot. And finally, Dealer's Choice 90% constitutional U.S. Mint silver dimes and quarters are just 65 cents over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.